It's time for Ask Mike Mondays. Mike answers one listener's question every week. Here's Michael Becker and Paul Peebles.
Welcome to Ask Mike Mondays. I'm your host, Paul Peebles, National Underwriter for Old Capital. Joining me today is the smartest guy in the room and the mayor of Beckerville, the Honorable Michael Becker.
Hey, Paul. How's it going?
I'm doing great. Michael, who owns over 5,000 apartment units in the DFW area, is a great source of just great information and knowledge about operating multifamily properties. He has over $100 million worth of investor equity that owns these properties with him. So what do you think you have in some of that non-recourse debt on the books right now?
Oh, geez. I mean, we sold a few deals, but we're around $300 million, I think, in outstanding, maybe a little bit over $300 million in debt right now.
Better you than me. So, smartest guy in the room is a former banker, too, with one of the largest banks in the country, before he made the great decision to move over to ownership from loaning money to now owning properties. So, good for him. Question that came up in Ask Mike Monday. Mike, would you please elaborate on all documents / information that a buyer needs to receive from the seller before submitting an LOI? Will the trailing 12 and rent roll be part of the documents that a buyer needs to review before the LOI?
Definitely a T12 and a rent roll are the two most critical documents that any seller would need to provide to a potential purchaser when you're going through the offering process and bidding on a property. You need to see the T12 and a rent roll. Some of these smaller mom and pop deals, they just give you a consolidated financial statement, and that doesn't really help as much. You need to see it broken down monthly, and then see the trends of income and expenses. So that's the center point of it that you'll get. Some of the other things you'll need to know is if there's any sort of like work that's been on the property. Typically they'll provide how many units have been upgraded versus not upgraded. If there's any known physical issues that the seller wants to disclose, they'll disclose that to you. That's pretty much what you get when you start offering on a property. And then once you get into escrow, you negotiate a contract or get an escrow, they'll start giving you all the diligence information, which include service contracts, and the ones that have to be assumed. So if you're buying a property that has like a laundry contract on it, laundry lease, for example, that's something that has to go with the property and be assumed. But if, they have their trash or landscaping, usually those contracts are cancelable with a 30-day notice. So those don't have to be assumed. So that's very important to know what you have to assume, what you don't have to assume. So that's one thing, as well as they'll give you utility statements, sometimes copies of bank statements so you can verify deposits, and a whole laundry list of stuff. Those are the ones that jump off the page of me as most critical information that the seller will give you for sure.
So you guys have done a lot of off-market acquisitions. I mean, you're blessed to be able to do that with your connections. But a lot of people are out there trying to find the off-market deals. What are some of the pitfalls for deals that are off-market?
Using a lot of resources and time on something that you're not sure if the seller's actually a seller. So that's one issue where you can just kind of be spinning your wheels and the guy's never going to sell the property anyways. So that's just kind of a fact of life when you do that. Another thing is if where a good example is we're bidding on a property next door to one that we own, and a broker brought it to us because the guy wanted to sell it. He was going to sell it off market, but we're going through the whole process, and we were thinking one price, and the broker was initially told me a price that was, pretty close to the price that we were thinking. Then he went up $500,000, which was still, okay relative to it. Then they present the number to the seller, and he's $2 million higher than that in his mind because he had some advisor that told him that the property is worth X, and the guy had owned the deal for ever and ever and ever, so he's not really active in the marketplace. And he said his expectations are disconnected with reality. So what's likely going to happen is the guy's going to go kind of flail around a little while with this ridiculous number. No one's going to bite off on it. Then he's going to have to get disappointed a time or two, and then he'll come down to reality of what the pricing is. So that deal may or may not come back to us at some point in the future. But, we just spent all this time and resources, went to the property a couple of times, shopped it, underwrote it, spent, many hours on it, and then it never goes anywhere. So that's just some of the pitfalls with buying properties off market. But the flip side is you're bidding all these marketed deals. whether you know they're sellers and then you're bidding against the marketplace when they get, 10 offers on these deals and you get the best and final in the top 2 or 3, and then the price goes up and up and up. And then sometimes you either get pushed past some point of comfort on price, or you're the bridesmaid and you don't win the deal and you spend all this time and resources and then someone pays more money than you. So this is a tough world out there. So you got to weigh all that out.
Yeah, some of these brokers, they think they want to get the listings, but some of the sellers, bring me an offer. So the deal's never tied down to an actual listing agreement, and the seller doesn't really know whether they want to sell or not. They're just looking for what the highest price that the short market will give to them. Is there a lot of frustration for some of these buyers out there that kind of figure out that the property is really not listed for sale?
Yeah, that's a frustrating thing if you're a buyer and you spend all this time on something and then the guy's just never an actual seller. That just happens, though. It's kind of, you got to roll with it, and that's just part of life, trying to buy a deal off market. And then, like I said, the market deals are tough because then the pricing tends to go away from you sometimes. You got to really, really push and stretch past your comfort zone. So it's a difficult environment out there. So it's really about, staying disciplined within your return parameters and being, relatively conservative in your underwriting. And you just got to, it's a numbers game. You just got to get more and more deals in front of you, both on market and off market, and eventually one will hit.
That's good. Anything going on in property management these days, Michael?
Not too much. I think we mentioned on some of the previous podcasts some of the headwinds I see in the marketplace. Taxes have been tough for the last several years. The counties, appraisal districts are catching on that it's a good apartment market, and they're raising the values that you're assessed at every year. So taxes have been going up. Recently, payroll and specifically the maintenance personnel on your property, it's hard to find a good maintenance man. So their labor cost is going up. So payroll is going up, in particular on the maintenance side. And then one of the things, I actually had lunch with my insurance broker this past week, and we're talking about Texas has been, and specifically Texas has been hit pretty hard with a bunch of claims. So North Texas, where we're based, we've had a whole bunch of hailstorms over the last this year and last year. So I know I had 3 or 4 brand new roofs on our properties from hail. And then in the south part of Texas, where you don't get as much kind of hail, they had the hurricane that came through and just sat there for a week and dumped water. So all these properties that were flooded, that were non-flood zones flooded. So it was just interesting too that people that you got to be really careful. One of the things he was pointing out, to know what's in your insurance policy, because a lot of these people that even had hurricane insurance were really only covered for wind damage, where if flooding, because they weren't in a flood zone, they didn't have coverage for flood. So it was kind of just interesting to see how a lot of this, maybe I was thinking it was going to be really bad, a lot of carriers going to pull out. Well, he was saying a lot of the damage down in Houston isn't covered by insurance because it had exclusions in their policies. So I guess that's a little tip. That's not really property management, but that's kind of more asset management. Make sure you understand what's in your insurance policy and what you're covered for and what you're not covered. So you should ask a whole bunch of questions of your insurance broker, and make sure you go with the one that's experienced and seasoned, that's kind of been around the block a time or two.
So that's some great information from the mayor of Beckerville. We appreciate your honor being with us today.
Thank you, Paul.
So what else is going on in the old Capitol world?
You had a loan, Paul. Maybe you talk about you had to switch lenders and mid-process due to some physical issues. You want to talk about that?
We had a transaction that was in one of the bordering states of Texas, and the borrower had put the deal under contract. We were looking to size it with Fannie Mae. Fannie Mae in that state has what's called a pre-review. Michael, what's a pre-review?
When they have Fannie Mae has a large exposure in any one market, or have taken losses in that market, they'll put it on what they call pre-review. So the Fannie Mae lenders are delegated authority, so it's called they have a DUS license, delegated underwriting servicer. So they have, as long as it fits within these certain guidelines and parameters, the lender can make a loan and then they'll sell it to Fannie Mae later. Well, they typically, in a pre-review market, they'll take the leverage where a maximum on an acquisition is 80%. They take that down to 65%. And if you want to get delegated, if you want to get more leverage, you have to go to Fannie Mae and have them review it before you actually make the loan. So that's different than the Freddie Mac, which is Freddie Mac reviews every loan that they make before they actually do it. So this is a little nuance and difference between the two.
I think that's one of the advantages of working with companies, similar to Old Capital or the lender that you're working for, is the ability to be flexible. Because in this transaction is that Fannie reviewed the property, reviewed the location, and with that pre-review market, they said not 80, not 75, but 65% leverage, and the borrower with his open jaw was like, I can't do 65, put 35% down. So we get to kind of pick up the box and bring it over to Freddie Mac and let Freddie Mac take a look at it. And that's not really a pre-review market for Freddie Mac. Again, same company, which is the U.S. government, backs up these deals, but Freddie Mac has a little bit of a different policy on some of these markets. And it kind of fit their box a little bit better, affordable housing, smaller property. And so we were able to go back, not 65, but up to 80% leverage with 3 years of IO. So the only reason I bring that up is that you have to work with a lender that has the ability to be flexible on their feet is when they see something coming down this way and that the investor cannot do 35% down, we are able to be a little bit more graceful about bringing it over from one lender to the next lender. And that deal just closed last week. So we were appreciative to that buying group that did that. And we were able to get the higher leverage back for them. So that was great. Anything else?
That's it, really. If you guys want to know more about Old Capital, please go to www.oldcapitalpodcast.com. There you can find our multifamily financing 101 white paper, kind of the how do these deals get put together. So if you're a aspiring or first-time apartment borrower, that's kind of the basics of it and what to kind of expect through the process, as well as there you can find on the oldcapitalpodcast.com, you find the sample due diligence checklist that I put together. It's all the information that we look for when we're putting our LOI out there.
Yeah, that checklist is unbelievable because it's what Michael really uses for when he buys these $10, $15, $30 million properties and some great information on that. That's what you want to take a look at. You know, I wouldn't call our listeners apartment buyers. I would call them apartment nerds. And if you know any other apartment nerds that want to kind of figure out how these properties are put together, you know, send them information about the Old Capital podcast. Hopefully we can share information with them like we've shared information with you about what's going on. So if you have a RIA or a meetup, we would appreciate if you would mention our name about listening to the Old Capital podcast. Also, if somebody wanted to get information about working with you, Michael, what is the best way of doing it?
Really, just the easiest way to get in touch with us is just go to our website, which is www.spiadvisory.com. That's SPI like spy advisory.com. That's the company that we operate out of and buy apartments in. There you go to the contact us form and send your information in and set up a brief phone call with me. It's good to get to know and talk to people that listen to the podcast.
Thank you, Your Honor. That was the mayor of Beckerville, Mr. Michael Becker, smartest guy in the room. I'm Paul Peebles. Have a great day.